Hello, welcome to Swing Trader Galore, a new YouTube channel where we look at stock setups for potential swing trades. Those are trades that last maybe a day to a week or two, or potentially many weeks or months. And today we're looking at Guardian Health Sciences Incorporated. As always, we do not give financial advice. Make your own decisions, do your own due diligence. We just look at stocks that present potential setups for good swing trades using support and resistance lines to make our decisions. Now, today we're looking at Guardian Health Sciences, and you can see here on the 5-day, 5-minute chart why this stock has gotten so much attention lately as it climbed from 37 cents just a few days ago all the way back to $1.04. Then it's come back down recently, and the question is this stock going to continue to rise, or is this the beginning of a fall? So we're going to look at Guardian Health Science today. You can see the intraday volatility. Now, let me make something clear. If you're an investor, so you're making a long-term investment in a company whose mission and purpose you believe in, you like their leadership, and you believe in their product or service, whatever they sell, you don't need to worry about a 5-day, 5-minute chart, the intraday chart. This is just going to stress you out because you're looking at intraday volatility, which isn't important to you. Right? It's especially true of a 1-minute chart. If you're looking at a 1-minute chart, this is a chart that is used for day traders who look at the chart and they look for moments in the chart where they might be able to buy, say here at 70 cents. They follow the chart up to 73 cents and they sell, but they buy, let's say, 30,000 shares. And they make 3 cents per share and they make $900 in the course of just a few minutes, and then they sell and get out of the trade. Or they might do the same thing with a 5-minute chart. Look for setups in here where they can sell right here at 69 cents, and it might run up in that 5 minutes 7 cents, and they can make 7 cents on a lot of shares and get out. But if you're an investor who's investing for years, you don't need to do that. And if you're a swing trader, these 5-day, 5-minute charts, these shorter charts of the minute, can really confuse whether the stock is going up or down. I like to look at the 1-hour chart, or potentially my favorite is the 4-hour chart to get a real sense. And this is where we'll start with Guardian Health Sciences, because look at this 180-day 4-hour chart. So each one of these candles represents a 4-hour block of trading. And you can see that 6 months ago, we were trading right around an average maybe around 47 cents. And a couple times we crossed this green line. This is our first resistance line right around 55 cents. And it crossed over here. But every time it did, it dropped back down. And down here we have support at 38 cents. And you can see for this several months here, we traded between these two lines. And it would get close, and then it would fall back down. And it fell back down to here, and then it came back up, and then back down to the support line. So this was our trading action until right here. We get to August 12th. We go underneath the support line, support collapse. We establish new support at 28 cents. We come back to the old support line at 38 cents, and then it collapses again, and it goes down to 20 cents, and it falls all the way down below to 16 cents. And this is bad for Guardian Health because they trade on the NASDAQ, and that means that they need to trade above $1. And so they're in non-compliance here. They hire a new CEO, which is a huge catalyst, and we see the stock climb back in above the 28 cents line, but then it comes back down until we get right here to our recent price action starting in late December of 2020. And you can see this shows that after we cross back over that 28-cent line, we start moving back up, way up here to 62 cents, back down, back up, and then we have these new support and resistance levels that are established. But what's really important to understand is look at this trend. If we were to draw a trend line here, if we were to draw a line, we would say this stock is going up, right? It's moving up here, right? It's gone from the 28-30 cents range, and now it's trading as high as $1, and right now it's trading around 70 cents, but the trend is up here. And you can really see this if we look at the 1-day chart, 1 year, 1 day, right? Here we are, we're moving up, right? And that's really important. Now the question we have though is Guardian Health Science going to continue to move up because it needs to get above $1 to get back into compliance and trade there for about 10 days to stay in compliance. So that's the question here. As we're trading at 68 cents, where is this stock going to go? But we can see this trend line is really moving up. Now let's look at where we are, where our support and resistance is, based again upon these 4-hour charts. Okay. Now look at this run up we have here, right? Right around here is when we start to see the run up, and then this day right here on January 5th was the day it crossed over this yellow line of 80 cents, and this 80-cent line is really where our resistance is, right? It crossed over, and it keeps trying to come back, right? You can see that even though we have a wick here that goes above it, it really traded at 80 cents, and here it traded at 80 cents, and here it just crossed 80 cents on this wick, and there it's almost at 80 cents, and here it's at 80 cents again. So 80 cents, the stock seems to try to get to 80 cents. And what's interesting is if we look at these 80-cent totals, and we drop it back down to the 5-minute chart here, you can really get a sense for what's going on. Because every time the stock goes above 80 cents, it tends to try to run up, right? Every time. You can see here, it got above 80 cents, and it kept going, and that's when we hit that dollar spike, right? It gets above 80 cents right here, and it tries to go up. So every time we cross 80 cents, here's another one. Crosses 80 cents, and it tries to go up, right? So it's trying to go up over 80 cents. It gets to this dollar range, and then it falls back down, and that's where it is now. It's falling back down. And so we've established this new sort of support and resistance the last day. It's been around 80 cents is the sort of resistance. Down here around 70 cents is the support level. And you're seeing this on the far right of my screen here. We're testing that now and seeing if the support will hold up. As we speak, it's around 67 cents. Right? Now, what's interesting is that we're trying to figure out if this is going to stay above that 80-cent level, right? And what we see, sorry about that. What we see is that after we got into this area, we're kind of just consolidating, or what we might call congestion. And you might see this big red candle here where it was trading at as high as 81 cents, but it fell down as low as 60 cents. This is a bit of an anomaly. And the reason why is because this is the time period when the Capitol, Washington, D.C., was stormed by protesters and the market sort of froze. And this thing came back, and it got back to that 80-cent level, then back down to the 70-cent level. So it's trading in this area for the most part. Between 70 and 80 cents is where this is trading. And this is a lot of congestion. It's not really making an up or down move, right? It's kind of just going laterally, sideways. So this is a place where we see the stock is deciding whether it's going to get through the 80-cent mark or it's going to go below 70 cents and fall back down. Now remember, they've got to get above $1. And one thing we could like to ask is what happens if we get above $1? And that's really interesting because this is a 6-month high. It's also, if we go to the day chart, we'll see that this is a 1-year high. So a 1-year chart doesn't tell us anything about where this stock is headed if it gets above $1 and stays there. In fact, you've got to go to the 3-year chart to really see where we're trading at above $1. Here's our 80-cent line, and we have this big gap up to $1.20. Here's our next level where we would start to see resistance. So if they can get above $1, it maybe goes up to $1.20 pretty soon after that. And then our next level of support is probably somewhere, resistance, probably somewhere around here. We would start saying maybe something around $1.60. And then really from there, it goes way back up to its $4 3-year high. So a lot of potential for growth here with a new CEO. They're waiting on maybe more catalysts. They have a launch of an energy drink. So that will determine whether this stock goes back up above 80 cents and into the dollar territory and stays there, or whether it kind of pull back and we're going to see a return from these 70, 80 cent levels back down into this previous support down in the 40, 50 range. That's Guardian Health Sciences. Please smash that like button. Let us know if you like this video. Leave comments. And if you have another stock you'd like us to analyze for a short swing trade, send us an email or leave a comment on our YouTube page. Thanks for listening.